February 2026 will go down in crypto history as the month of the Great Sobering. After the euphoria of January, when Bitcoin stormed psychological highs and Solana meme coins created an illusion of easy money, the market received a harsh slap in the face. The February crash, which dragged BTC down to 65.0 and many altcoins down by 40–50%, became a watershed moment. But it is precisely in such moments, when tourist money leaves the market, that windows of opportunity open for those who understand the difference between hype and technology. While retail investors panic sell at the bottom, smart money is aggressively buying up two assets that have de facto become the circulatory system of the new digital economy: Hedera, HBA, and XRP, Ripple. Today, we will conduct a deep deconstruction of these projects. We will break down why the FedEx and Hedera partnership is the event of the decade, how the RLUSD stablecoin is saving Ripple from regulators, and what the charts say on the morning of February 16. Part 1. Macro Context 2026. The Death of Speculation, the Birth of Utility. Before moving on to the coins, we need to understand the world we are living in. 2025 was marked by legal victories. The SEC lost key court cases, and Donald Trump, who took office in 2025, kept his promise to liberalize crypto legislation. However, 2026 brought a new challenge: integration. The market no longer reacts to announcements of announcements. It needs real transactions, mainnet activity, real-world assets, RWA. Tokenization of real estate, bonds, and stocks has become the standard. BlackRock is already trading tokenized funds on Uniswap. DePIN, decentralized physical infrastructure. Blockchains have started managing physical objects from 5G towers to logistics containers. It is in this new paradigm that HBAR and XRP enter the stage. They are no longer cryptocurrencies in the old sense. They are infrastructure software for Fortune 500 corporations. Part 2. Hedera, HBA. When logistics meets Hashgraph, the event of the last 72 hours that changed the game is FedEx joining the Hedera Governing Council. Why FedEx? Why now? Many underestimate the scale. FedEx is not just a post office. It is a global IT company pretending to be a delivery service. They process 19 million packages a day. Each package requires dozens of scans, status updates, and verifications. Traditional databases, SQL, are bursting at the seams from such a load and are vulnerable to hacking. First-generation blockchains, Bitcoin, Ethereum, are too slow and expensive. 510 per transaction kills logistics. Hedera's solution: Hashgraph technology, not a blockchain, but a directed acyclic graph DAG, allows for 10 0+ transactions per second TPS, with finality in under 3 seconds. But the main thing is the fixed price. Recording a package status on the Hedera network costs 0.0001, always, regardless of the HBAR token price. This gives FedEx CFOs predictability that neither Solana nor Ethereum has. On the back of the news, the token broke through key resistance and is trading around 0.104. Demand. Now, FedEx is required to buy HBAR to pay for gas on the network. This is not speculative demand, but utilitarian. The more packages, the more HBAR is burnt. Governing Council. FedEx has joined Google, IBM, Boeing, Dell, and LG. This is the most powerful corporate coalition in crypto history. No other project, even Ethereum, has this level of direct corporate governance. Part 3. XRP. Ripple. Banking standard and the RLUSD factor. While Hedera captures logistics, Ripple continues its trench warfare for the banking sector. And in 2026, they have a super weapon. In 2024-2025, Banks were afraid to use XRP due to volatility. We can't transfer millions if the rate jumps 5% in a minute, they said. Ripple heard them. In 2026, the RLUSD, Ripple USD stablecoin, fully backed by US bank deposits and treasury bonds, became the bridge. How it works. Bank A, USA, sends RLUSD, XRP ledger. Bank B, Japan, receives RLUSD. Role of XRP. The XRP token itself is used as gas for transactions and as bridge liquidity in AMM, automated market maker, pools. Result, RESPM, network liquidity has grown exponentially. Even if banks don't hold XRP on their balance sheets, they create demand for it by using the network. Despite successes, XRP is going through tough times on the chart. The February crash hit it harder than others due to a massive amount of leverage long. The price fell from 3.5 plus to the current 1.46. This is a classic shakeout. Fundamentally, the project has become stronger, RLUSD, victory over SEC. But technically, the asset is oversold. Part 4. Technical analysis and scenarios. Let's look at the chart soberly, without emotion. HBAR, USDT, bullish breakout. The HBAR chart on the daily time frame is a textbook example of technical analysis. Pattern. We see a breakout from a giant falling wedge that formed throughout 2025. Momentum. The FedEx news created a candle with huge volume. This is smart money entering a position. Zones of interest. Support. 0.095, 0.098. If the price returns here, it's a gift from the market. Retest. Resistance. 0.12. This is the level where buyers from last year are stuck. There will be a struggle. Target. 0.155. Fibonacci 1.618. Indicators. RSI is overheated. 78 plus. A short consolidation or sideways movement is possible before the next surge. XRP, USDT. High volatility zone. Here the picture is more complex. We are in a level defense phase. Structure. After a vertical drop, the price found a bottom around 1.3, 1.35 and is trying to bounce. Current price 1.46. Threat. A bear pennant is forming on the 4-hour chart. If we don't close above 1.55 in the next 24 hours, there is a risk of another flush to 1.15. Opportunity. On the weekly chart, we see a golden cross, 50 MA cross 200 MA. This is the strongest long-term signal. Everything happening now is noise before a global cycle of growth to 5.8. Strategy. For XRP, only DCA, dollar cost averaging, works right now. Attempts to trade intraday with leverage will end in liquidation due to choppiness, sharp up and down movements. Part 5. Market Psychology. How not to be a hamster. The biggest mistake beginners make in February 2026 is trying to win back losses. After a portfolio drop of 30-40%, there is a desire to enter with 20x leverage into the first green asset available. Stop. That is exactly how exchanges make money off you. Correct smart money psychology. Acceptance. Correction is part of the game. Bitcoin has fallen 80% 4 times in its history and updated highs every time. Focus on utility. In a crash, only projects with cash flow from the real world survive. Hedera has it. FedEx pays for transactions. XRP has it. Banks pay for liquidity. The dog with hat meme coin does not. Planning horizon. We are investing not for tomorrow, but for Q3. Q4 2026, when analysts predict an altcoin supercycle driven by easing Fed monetary policy will begin. Part 6. Conclusion and action plan. February 2026 is a bifurcation point. The market has been cleansed of weak hands. What to do right now? If you have no positions, start accumulating HBAR in the 0.0950.1 zone. It is the asset with the best risk-reward ratio right now. Place buy limit orders for XRP in steps 1.35, 1.25, 1.15. If they hit, take it without thinking. If you are in a drawdown, do not sell at a loss. 20 RP and HBAR fundamentals are stronger than ever. Selling now is a gift to whales. Use staking. HBAR yields about 2-3% APY in native staking. It's not much, but it allows you to increase your stack while waiting. Follow the news. Key dates. Fed meeting, March. New Hedera Council announcements, major automaker expected. Ripple Markets quarterly report. Final thought. Cryptocurrencies are no longer a geek's toy. They are planetary infrastructure. 10 RP is the money of the internet. Hedera is the trust layer of the internet. In 2026, you don't need to choose between them. You need to own both to own the future. Stay strong, stay liquid.